Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra. While the bulls are marching on, the Nifty has finally scaled the 18,000 mark after April 5th. And to understand where our market's really headed, I'm going to be joined by somebody very, very special. Mr. Hemang Jani joins in. He's the equity strategist at Motilal Oswal Financial Services. Welcome, Mr. Jani, and thank you so much for taking the time out on this discussion. Well, heartening to see that 18,000 mark finally on the screens. But help us understand, how are you looking at the scenario? Does this bull run have more legs to go? Where are the markets headed?
Thank you so much for having me, Sakshi. Yes, the kind of outperformance that we are seeing both from January till now and also from July onwards till now is extremely encouraging. And what is interesting to see is that it is backed by strong data points, both in terms of earnings and this festive season that we are in. If you look at the initial indications of the growth across auto, consumer durables, and whole host of things, it's pointing to the fact that we are in some sort of a revival mode. And we think that given that backdrop and the fact that flows also have started coming into India in a big way, this trend is likely to continue.
Okay, so what levels do you really see for the Nifty by, say, Diwali or the end of the year?
I think, given that we are in a strong momentum and the data points are positive, I would definitely be positive in the market. In terms of specific levels, maybe immediate short term, we could look at around 18,500 plus. But if one has a medium to long term perspective, I think another 15% kind of an upside in the index is very much possible.
Okay, so do you still believe that now that the global markets are playing catch up, will the Indian market still continue to outperform that they have done over the last 6 months?
So Sakshi, that depends upon how the crude and the commodity prices play out. Because the large part of the uptick was because there was a sharp cool off in some of these, particularly crude oil. So as long as it remains, around these levels, we should be fine. And there is a strong case for India's outperformance, even from now, because of the kind of growth visibility that we have vis-a-vis most of the other countries, be it China, Europe, and even to that extent, US.
Right. But does the thought of, say, steep valuations cross your mind? There has been a slow murmur of that, we are, steeply valued at this point in time. What do you think of those levels there?
I think, Sakshi, at the index level, valuations are not looking stretched. Yes, they have gone up. But as long as the growth is intact and we don't see any major issues on the interest rate front, we think that this will continue. I don't think the bull market stops because the valuations are very high.
Okay, understood that. So what are you telling investors right now? What should one do? Is it time to buy more? Is it time to stay put with whatever you have, or start to book partial profits?
I think when you're coming into equity market, one should not try to time it to perfection. We think that there are pockets like banks, auto, consumer companies, capex, hotels, defense. These are the pockets where we are extremely positive. You might see some correction, some rotation here and there, which is part and parcel of the market cycle. But overall, we are extremely positive and we will be comfortable entering into the market even at this level.
Okay, so what would be your top bets now that we are approaching the festive season? You talked about consumption space, you talked about banks and the other spaces. What are your top bets at this point in time?
So our top bets would be banks. So names like SBI and ICICI Bank are there. Apart from that, IT, which is showing some sort of a pullback. So Infosys and TCS are top bets over there. In consumption, we like something like HUL, Jubilant Food, and Titan. And auto, we like Maruti and Motherson Sumi, which is an auto ancillary play. Defense, we like BL. Hotels, we like Indian Hotels. So I think these are the names where we have a very high conviction in terms of growth, visibility, and valuations both.
Right. But what about the IT space? We've seen the stocks have continued to suffer, but have they made a bottom? And what is pushing tech stocks even lower now with the talks of US, Europe perhaps coming into recession in 2023? Would that be an added on pressure as far as the operations and margins are concerned for the IT majors?
So, Sakshi, what we've seen is that the underperformance is quite sharp in the last 6 months. And when we look at the data points, most of the companies are saying that the technology spend is going to continue. And there might be a little bit of rotation in terms of which domains and which sectors can have a bit of a slower tech spend versus the sectors which will have a higher tech spend. And the
Right.
margin picture, we think that margin somewhere has kind of bottomed out, so you may not see any incremental negative, news flow on that. So from a risk reward point of view, IT looks like a great sector to enter.
Okay. And what's your take regarding what's really happening in the entire cement pack right now? I mean, is the street getting unduly excited about the price hikes, the reduction in input costs, or would it be better to wait, see how it pans out? Or do you think there are actually signs that the worst is perhaps over for the cement pack?
I think, Sakshi, the reason why we are seeing such a strong momentum in names like Ambuja, ACC, and other cement companies is that you have a player who has come into the market, which will have a lot of consolidation. And both in terms of balance sheet and in terms of capacity addition, there might be aggressive plans. And we are also seeing that the certain raw material prices have come down. So both a combination of a consolidation in the sector, input prices coming off, are giving a lot of comfort to participants, and we think that the sector should do well, even from a medium to long term perspective.
Right. Also, help me understand your views, sir, on the small and mid cap space. Now, they have outperformed over the last month, with a wide margin. How should investors really play this theme in the coming months?
So I think Indian market is known for the strong opportunities that you see across the broader market. And from a retail standpoint, I think definitely we should participate in themes like quick service restaurants. So you have something like a Jubilant Food or Devyani. Real estate is something that we are extremely positive on. So Oberoi, Lodha, some of the Bangalore-based real estate companies like Brigade, we have a positive view over there. Hotels have run up, but smaller companies like Lemon Tree still provides a good upside potential from where we are right now. So overall, we think that the momentum will continue. One has to be a little careful about which pockets you are getting in, having seen such a big run up, and keep some powder dry in case there is a correction. But overall, we think that the bull market conditions will continue.
Okay, bull market conditions will continue. Great note to end that interesting conversation. Thank you so much, Mr. Jani, for being with us and sharing all the insights about markets that all the viewers have been very, very excited to know about as to how to approach the markets at this current juncture when we are approaching those record highs. Thanks a lot. It's been a pleasure.
Thank you, Sakshi.
If you like the video, do like, comment, share and subscribe.